this one little ounce that I'm holding in my hand, it's not worth 5,000 or 10,000. It's worth 36,000. If the true value of an ounce of gold is 36,000, then that means that the true value of an ounce of silver is 1,800, not $100 or $90 or $80 or $70. It's a flippin' bargain.
People must think in terms not of the fact that gold might go up 3 or 4 times from here, but the fact that they might lose all of their money because they haven't got it in a safe currency. Mm-hmm. And I think, therefore, it's impossible to give a forecast what gold is going to be, but it's not going to be 10,000 or 12,000 in my view. It's going to have a lot of zeros after it in today's money.
The true intrinsic value of precious metals is drastically higher than current market prices. Mathematical models suggest that a single ounce of gold is fundamentally worth $36,000, which by extension prices silver at an astonishing $1,800 per ounce. At current levels, these metals represent an absolute financial bargain for serious investors seeking stability. Egon von Greyerz and Lynette Zang, two highly respected experts and staunch advocates for long-term wealth preservation, emphasize that investors must look beyond mere price targets and profit multiples when evaluating their portfolios. The real danger lies in the complete loss of wealth due to failing fiat currencies, making safe haven assets absolutely essential for financial survival rather than just short-term speculation. Predicting an exact future price for gold is nearly impossible, as the final fiat valuation will likely have many zeros attached to it as traditional money completely collapses. To protect your purchasing power and survive the coming currency reset, securing physical assets is essential. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
This is sound money. This is fiat money. They're both money. They're just the flip side of the coin. Governments create this. Corporations, I should say, corporations create this because that's what the Federal Reserve is. God created this. So gold and silver are the only true forms of money that were not created by man. And every other, no exceptions, every other money that was created by man has gone the way of the dodo bird. It simply loses all value when the confidence is lost. So, how much is this really worth? Is $5,000 an ounce a lot? Is $10,000 an ounce a lot? Yeah, I know you wish you'd have bought it at 248 or, I don't know, how about $20? Because that's what it was once. But based on the most current data that I was able to pull for the level of debt, which is what creates the fiat money, so you use that as a proxy for all the money that's out there. And as I showed you, with physical gold and physical silver, both of this is the same, there's a finite amount. That means that this one little ounce that I'm holding in my hand, it's not worth 5,000 or 10,000. It's worth 36,000. Well, when you go to the store and something is on sale that you know is typically worth a lot more than what they have it on sale for, what do? Do you go, oh no, I don't want to buy it yet because maybe the price will get a little cheaper? Or do you buy all you can fit in your cart? That's what I do. That's what most people do. Do not be fooled by the lies, because we will come to a point where we will not even be able to lay this in other words, buy it. So you do it when you can, as you can, and get that strategy in place and executed. And if spot gold, if gold, not spot, if the true value of an ounce of gold is 36,000, then that means that the true value of an ounce of silver is 1,800, not $100 or $90 or $80 or $70. It's a flippin' bargain. And so what should you do? Continue to accumulate while you can execute the full strategy. Because frankly, there's gold and then there's gold. There's silver and then there's silver. What do you want for your protection? You need to have a lot of all of the above, right? Because it depends on what it is that you're trying to accomplish. And I have to remind you of this because it's critically clear, and I haven't shown you this for a while. But this is a paper from the Bank for International Settlements. Who are they? They're the central banker's central bank. So you could say that they are the biggest and most important bank in the world. And they did a study on what share for gold on the interaction of gold and foreign exchange reserves. Okay, and what do they say about gold? Well, first, they say that gold is an asset viewed by many as durable and largely imperishable. Yeah, it is, right? It's indestructible. It's one reason that it can be the primary currency metal. And it refers to it free of default risk. The BOPM, Precious Metals, clearly establishes that gold bullion is the only case of a financial asset with no counterparty risk. No counterparty risk. It's not entirely true on bullion because there is the confiscation risk. That's why personally, because I lived through that myself, this in 1964, my uncle had at least 3,000 ounces of these because this was the only legal way to hold it. It's significant. So gold, the only financial asset that runs no counterparty risk. Unlike currencies and debt, which are claims on foreign governments or institutions, gold kept at home is not subject to political manipulation. These are not my words, my friends. These are the Banks for International Settlements, and you could go read them yourselves in the conclusion. Third, gold has been empirically proven to serve as an inflation hedge, at least over longer periods of time. So yeah, anything can happen in this paper manipulation. That's easy peasy. But what we're seeing right now, you better have gold and silver in place. What if this is officially World War III? You could easily lose your ability to position into this. Don't let that happen. I'm telling you, you don't want that to happen. I would rather be 10 years too early than 1 second too late, because that's when I lose all of my choices. And fourth, last, its most widely recognized feature is its potential value in highly adverse scenarios. I don't know, you guys. And this is just one, right? We've been watching what's happening in the stock markets, in the bond markets, in the currency markets, in the money markets, in the private equity market, where they're right now not putting up gates to stop you. I'm going to be recording a video on that. You need to pay attention to that one a lot too. You know, if all your wealth is held in the intangible markets and those markets say no, you have no other choice, period. And I know 100% that together, 3% of the global population, just 3%, can get sound money back in the system again. We got a shot. Let's take that shot while it's available. Let's grow this sound money movement. Citizens for sound money. Let's grow this movement globally, and let's make a positive difference for everybody.
I'm also on record for saying that between 6 and 12,000, but I add in today's money. And I think now I'm going to change my mind about this, because it is not worthwhile any longer to talk about today's money, because we're not going to have today's money. Nobody's going to see today's money. We are going to see hyperinflationary money. So to talk about 6,000 or 12,000 is meaningless, because what people have to protect themselves against is gold at 100 million or 100 billion or 100 trillion. We have no idea how many series there will be, because we have no idea how much money will be printed, but it's not likely to be less, bearing in mind the massive exposure of the world economy. Just take the derivatives of 1 quadrillion outstanding, which most of them are worthless. So the money that has to be printed is probably more than we've ever seen in a similar situation. And therefore, it's impossible to say how many series there will be. But people must think in terms not of the fact that gold might go up 3 or 4 times from here, but the fact that they might lose all of their money because they haven't got it in a safe currency. And I think, therefore, it's impossible to give a forecast what gold is going to be. But it's not going to be 10,000 or 12,000, in my view. It's going to have a lot of zeros after it in today's money.
Fiat currency is intrinsically flawed and mathematically destined to lose all purchasing power, leaving physical gold and silver as the only true forms of finite sound money. By evaluating current global debt levels as a direct proxy for circulating fiat, the fundamental intrinsic value of gold rockets to an astounding $36,000 per ounce, mathematically pricing silver at a severely undervalued $1,800. Furthermore, the Bank for International Settlements officially recognizes physical gold as the ultimate financial asset, completely free of default and counterparty risk when held outside the traditional banking system. As the global economy teeters on the edge of a quadrillion-dollar derivatives collapse, severe hyperinflation is virtually guaranteed. Securing physical precious metals is no longer about seeking simple investment returns, but about executing a critical wealth preservation strategy to survive the total destruction of paper money. Let's get back to the interview.
The pressure on gold now will be twofold. One is the collapsing currencies. And then we talked about the dollar, but also every other currency will also go down, maybe not at the same speed, but they will do. So that's one pressure. The other pressure is combined with the fact that gold will go up just because currencies are going down, you have the pressure of that only 1% of world financial assets are in gold today. And in spite of that, gold has gone up 5-6 times, depending on the currency, in the last 11 years, and which is quite amazing that you've actually seen a stealth market where gold has gone up so much without anybody owning it. Gold money has seen a major increase. We've seen very good increases in investment, but that's nothing compared to world financial assets. And you're seeing now the first signs of people now becoming more desperate. People want to buy gold now, but it's still a very, very small percentage. But when major funds and major asset managers and major pension funds start buying gold, and they will also buy physical gold because they won't trust the paper market, which they shouldn't anyway. Yeah. And when that starts, there won't be the gold around. And even the gold that they say is there won't be there because central banks will not have the gold that they say they have and it'll be lent out, etc. And therefore, the pressure on the price will be enormous. And this is what's going to move gold so fast.
You guys know, like silver, there is a finite amount of gold. And it's used in 33 different corners of the world, probably more. Those were just the ones that I could think of. And it is the anchor. So it's not nearly as volatile as silver, but you got to have both. And the Zang International sound money strategy is built in layers. Yep, it does. It includes a level of cash, and I'm showing you the Iranian rial that I can't buy anything with. And I'm also showing you my Zimbabwean $10 trillion note that I can't buy anything with. And let's face it, even dollars, when I go to look for them, I don't know why I can only just find the small ones. But there was a time when $100, that was a lot of money. You could buy all your groceries you needed for a week and then some. Today, the only reason why any of it has any level of purchasing power is because you're still willing to work for it and use it as your tool of barter. But that too is going away because what all of this will do is create much more rapid inflation. And when they talk about inflation going down, I love how they use those terms because in your mind, when you hear, oh, inflation is down, what you think is prices have cut back, but that's not really the case and that's not what they mean. What they really mean is that the rate and speed of the increase has slowed a bit. Well, this will speed it up. It'll speed it up in droves. And keeping in mind that in any con game, you got to have that confidence and you got to have that new money. And that's what war justifies, is printing all of this money because all of these troops and all of the equipment, right? Here's a little lesson for you. There are two types of debt. Self-liquidating debt. So that would be if I borrowed money to expand my business and thus attracted more customers, and those customers, ultimately, they're buying goods from me and I can pay that debt off. So that's self-liquidating debt. But all of this is all what's called non-self-liquidating debt. So they build a bomb that costs however much, millions, billions of dollars, and they blow it up. Well, they're never getting that money back. for on yours and my level, that would be basically like a credit card. I go shopping, I put a whole bunch of stuff on the credit card. That stuff isn't going to generate income to pay itself off. That money has to come from someplace else. And the industrial military complex gets a lot of taxpayer money. Now they're going to get more, but building all of these bombs and sending all of those troops, you will see more rapid inflation. And since the level of confidence is like razor thin, I mean, I am just waiting for one little bit to push it to the lowest level ever. That, my friends, to me, will be a major technical piece, a major technical systemic shift. And we'll be talking about it in the day that it happens. And this could make it even closer to that.
The mainstream narrative surrounding inflation often proves intentionally misleading. Authorities may claim inflation is dropping, but does this mean actual living costs are reversing? In reality, only the speed of price increases has temporarily slowed. This fragile illusion is unlikely to endure. Massive issuance of non-self-liquidating debt used to fund global military conflicts sets the stage for trouble. Unlike productive borrowing that generates economic growth, spending billions on munitions, items that are literally destroyed, creates a catastrophic financial deficit. Such reckless expansion compels endless money printing and, in turn, accelerates the destruction of fiat purchasing power. With public confidence in fiat currency reaching razor-thin levels, can a major systemic breakdown be avoided? When massive institutional funds finally rush to protect their wealth in physical gold, an asset that comprises barely 1% of global financial assets, the available supply may instantly vanish. It is vital to follow this fundamental rule of wealth preservation. Secure tangible assets before the herd panics. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.